Did you know that even when the market is down, there is one investment tool that will keep your money safe? SIPs. Yes, many of you know about it, but for those who don't, I'm going to talk all about SIPs in today's video. I'm Neha Vashisht, you are watching etmarkets.com. Let's get to it. SIPs are a great way to invest in mutual funds and in the market if you don't know the market or don't have time to monitor the market. Now, what is an SIP? SIP means systematic investment plan. In SIPs, an investor's money is invested in a mutual fund over time at a predetermined interval, such as months or quarters. This can help you build wealth via regular investment by providing compounding results regardless of the investment amount size. This can be done with a DP, which is a depository participant, such as a broker. Now let's understand how exactly it works. When you make an SIP investment in a mutual fund scheme, you buy a specific number of fund units equal to your investment amount. When investing through an SIP, you can profit from both bullish and bearish market trends, eliminating the need to time the markets. You buy more fund units when the markets are down and fewer fund units when the markets are up. Since all mutual fund NAVs, net asset values, are updated every day, the price of purchase may change from one SIP installment to the next. The cost of purchases eventually averages out and ends up being on the lower end, which is known as rupee cost averaging. Now the next question is, how can you invest in mutual funds with an SIP? Number 1. Know your goals. Whether you want to buy a house, a car, or it's for an emergency fund, you must be clear of your long-term objectives. Next, depending on the type of investment, you must choose your amount, which can be as low as ₹100, and also your investment horizon, which can range from months to years. If you really want to get the most return on your investments, diversification of sectors is the key. Number 2. Documentation. A demat account with a broker is a prerequisite to starting an SIP. KYC documentation process is mandatory before you start investing. To complete your KYC process, you need to provide your ID, address, and a photo. Number 3 is choosing the right plan. For selecting the right mutual fund, you must focus on your risk appetite, frequency of investment, and number of units. Additionally, it is a good idea to think about buying categories that are not too volatile and have produced good results. Also, these investment categories must focus on businesses with greater long-term upside potential and businesses which have impressive CAGRs over previous 10 years. Every investor needs to be aware that there are a number of variables such as market conditions, investment strategy, and the type of investment made that can affect the rate of return on your investment. In order to reach the desired corpus, investors may also want to think about increasing their monthly SIP contribution by 10% annually. Lastly, use an online calculator to gauge your returns. You must always analyze, research, and only then invest, as investments in mutual funds are subject to market risks. Furthermore, any investment can be successful in the markets if it is started early and is planned for the long term. That's all for today's video. Keep watching etmarkets.com for more.